Thank you, Ibrahim. And panelists, welcome. It's a delight to see you, Nick, Mark, and of course, Tricia.
Good to see you.
Good morning, Doctor.
I think, of course, Ibrahim said I am the moderator for this session, and I'm looking forward to taking questions from the floor as well a little bit later. I do remind our guests today to please use Slido and pose interesting and challenging questions, and I'm sure I'll probably get one or two about Cukai Makmur and listings and so on as we go forward. Pardon me. Now, it's only been 2 weeks since the budget was announced, and many of us, we're all the markets digesting the impact of the same, and I think it's a wonderful opportunity for all of us today to actually have a look at what is the biggest budget in history, and what does it mean for the Malaysian economy, what does it mean for the transition and pivot to green, and the overall theme of inclusiveness. Now, Nicholas, if I may, pose the first question to yourself. Your thoughts, pleasantly surprised by the upside, MOF's anticipated GDP growth of 5.5% to 6.5% for 2022. Is it in reach in your mind, given the pump priming and our move back from, if you like, the pandemic as we get back to the new normal?
So, first of all, morning everybody, and thanks to Bursa and JP Morgan for inviting me to be here. Good to see you again, Dr. Omar. So, I think your question on how realistic the GDP projections are, I think, one thing that was really clear to me, and also my colleagues, was that the GDP projection, the fiscal deficit that they're projecting under budget 2022 is actually pretty realistic. Of course, a lot of it depends on short-term economic recovery, and I think the outlay that the government is planning does provide some support for the short-term economic recovery portion. And a lot will depend on things like how much consumption growth we'll see as we rebound back from things reopening, and whether or not the worst of the social scarring can be avoided, and also, of course, on travel and tourism as well. We know that Singapore and Malaysia have agreed to open borders with regards to flying. The next will be on the land border, and capturing that Singapore travel will actually be crucial for the economic recovery. And in terms, I think one thing I do want to give credit to is also really that I think the process of the budget this year was better than recent years. For example, we had a pre-budget statement this year, which I thought is a very positive move, especially if you want more clarity on where the budget might go. And I think the public consultation papers were also a very positive step. And some other reform measures, such as the Fiscal Responsibility Act, those things are actually very positive when we think about structural reforms of the way we do budgeting, of the way we do fiscal policy in this country. And the public consultation papers, as a matter of internal geekiness, I found that they were great, and a lot of avenues to give some solutions or ideas for actually very difficult questions that the government has to ask. But I think those were moves in the right direction.
Oh, thanks, Nicholas. I mean, speaking of what actually captured everyone's minds initially was clearly, for want of a better term, the unexpected highlight was Cukai Makmur. Needful and necessary to keep, if you like, our sovereign rating in place while having an expansionary budget to drive growth and to aid the rebound of the economy. Now, there are many questions, and I thought I might pose a question to you, Mark, as a tax partner from Deloitte. What can you share with us? I'm sure the practice has been engaging MOF on behalf of your clients as well as the broader market. Will tax breaks such as reinvestment, tax incentives, pioneer status and others remain valid in the tax assessment year of 2022? Some of the nuts and bolts, if I may, around Cukai Makmur, for what you know to date. For publicly listed companies, is it based on fiscal year or calendar year? And if a company is to start to incorporate more subsidiaries to break up profit, is that a way of minimizing or mitigating? I assume it isn't, because you have to consolidate. But what clarity can you share with our audience today?
Sure. Good morning, everyone. I guess cukai makmur is imposed on chargeable income, right? So that basically means the taxable profit after deductions and incentives. So if your company is enjoying incentives like reinvestment allowance, pioneer status, principal hub, etc., you will continue to benefit from these incentives, and the cukai makmur will be imposed on the net after deductions. As for which year it will impact, it will take effect for year of assessment 2022, and this refers to the fiscal year of the company ending in 2022. Malaysia, as to whether or not it's applicable on subsidiaries or consolidated profits, Malaysia does not have a concept of group taxation, and the determination of 100 million will be on an individual company basis. Um, Technically, if you look at breaking up the operations into multiple subsidiaries, you could mitigate the impact, but I'm not sure if that's realistic in the short term because Cukai Makmur is only for 1 year. If that is part of the larger plan to streamline the business, then it makes sense to bring forward the plan, the timeline. But if it's driven purely by tax, I wouldn't do that. It's aggressive tax planning.
Sound advice. Now, of course, the past 2 weeks, I'm sure many of your clients have been engaging you. What are some of the advice, if you may share with our wider audience, some of the advice that you've been giving them, the areas of concern that they've highlighted that perhaps we've not touched on as yet?
Yeah. Um, if the Cukai Makmur is only going to be around for 1 year, I hesitate to over engineer or plan around it, right? But if you do have plans on making capital investments, such as that will give you tax shelters, such as new equipments or investments in green technology, it does make sense to reconsider whether you want to do it in 2022 and bring it forward to benefit from the tax incentives. We currently have a lot of accelerated capital allowance incentives, reinvestment allowance incentives by the government during this time frame. So effectively, you are double dipping into the cost of investments, right? So how much you bring forward into 2022, you can crystallize more and and realize that shelter. If you have impairments or write downs in your books for investments that you expect to reduce in value over time, impairments are not tax deductible, but they've hit your P&L. Look at whether you can crystallize those impairments in 2022 to realize a tax shelter, right? And like you mentioned earlier, breaking up the business into smaller units, that works, but if only if it's in line with your greater strategy. Maybe you want to streamline your operations based on market geography, you want to streamline based on product specialization, or you're looking at hiving off your shared service function. These are all well and good business rationales that you could consider in breaking up the business to reduce the profits and have more subsidiaries. But if they're artificial segregation just purely on the books, or they're driven purely by tax motives, the authorities can enact anti-avoidance rules and disregard your structuring completely. And that leaves you back at square one with plus tax penalties. So I'm not sure that's the way you want to go around it if people are planning around that. For me, I think the problem is the tax is being imposed based on size, not profitability. The spirit of the tax is supposed to look at companies that have performed exceptionally well. So maybe we should have looked at taxing based on incremental profits over the last 2 years. If we impose the tax based on 100 million chargeable income, we're really just taxing based on size and not performance.
Was there, with your engagement in MOF, Mark, was there any commentary around the magic $100 million mark for?
Um, no, they've not mentioned anything around that at the moment.
If I can, I mean, I think if I may pose a question to you, Tricia. I mean, what is your take on Cukai Makmur? Because clearly an arbitrary figure of 100 million, well, is it regressive or progressive? Are we sending the right message? Companies that are larger clearly have a capacity to pay, but one would like to think they're the ones that are spurring innovation, investing in R&D and so on. Your thoughts, if I may, Tricia?
All right. Very good morning to everyone. Of course, Dr. Umar, CEO of Bursa. Thank you so much to Bursa Malaysia, JP Morgan for having me here today. My first response to the budget is to also repeat what my fellow panelist Nicholas was saying about the fact that this year's budget was much more transparent than before. In fact, the pre-budget statement is something that Ideas had been pitching for a very long time, several years already, because it's one of the best international practices with regards to what's called an open budget survey. So Ideas does this international survey on behalf of Malaysia every 2 years. And, I must commend the Malaysian government, especially the team at the National Budget Office, for wanting to work together and find out how we can improve our scores. So these are a list of things that you need to do. And one of the things was this pre-budget statement. And of course, the public consultation papers helped a lot as well. So congratulations. And I really hope this will mark the beginning of a new era moving forward, where the government provides us, what its concerns are. And I think the consultation papers were really good because it allowed us an insight as to the real issues and the challenges that the government is facing. And this helps people like us, outside external researchers, think tanks, to help the government, right? So we produce the kind of research that perhaps can be useful to the Ministry of Finance. But coming back to your question, Dato, about Cukai Makmur, it did not come as a surprise. I think over the last year or 2 years already, there has been speculation over how the government can broaden its tax base. And this has been accelerated primarily because of COVID-19. A lot of the payouts questions were already being asked about how the government plans to conduct fiscal consolidation, given the expected increase in government expenditure in this budget as well as in the years to come. And of course, the thinking at the time was that there would be something imposed on a slightly longer term basis. But of course, in this instance, right now, it's been a one-off. It's called a prosperity tax, Cukai Makmur, essentially what many people were speculating to be a windfall tax, right? From what I understand, I think among the economists, it is generally acknowledged that this Cukai Makmur will unfortunately not support long-term revenue generation for Malaysia. So it could be a good one-off instance as we think about short-term measures. But I think beyond this, the Ministry of Finance, together with the government, still needs to consider what would be a good longer-term broad-based revenue. And I think this is being addressed. So we are, for example, conducting this budget expenditure review. From what I understand, it's being done with the World Bank. So this is positive. We do hope, however, that things like the budget expenditure review, even the draft of the Fiscal Responsibility Act, this can be provided to not just Parliament, but to the public, so that we can see some of the iterations, right? Like, what are the plans for the contents of these documents? The other thing with regards to Cukai Makmur, I mean, what we're really talking about when we talk about Cukai Makmur is fiscal consolidation and conducting better fiscal planning, right, in the years to come. So just want to highlight that the other side of the coin, I suppose, is to think about our debt to GDP ratio, which of course, right now, there has already been a raising of the statutory debt limit to 65% of the GDP. I think what we're going through during the pandemic years is all of us, no matter which side of the equation, or rather the ideological spectrum that we're on, I think we all accept that there's a need to increase this. However, at the same time, we might have to think about what this does to long-term debt, and whether we would ever be able to go back down to the 55% mark, which, by the way, was not very long ago that was the self-imposed statutory debt limit. I suppose the last thing to say on Cukai Makmur right now is just to say that, so we issued a statement as well, talking about how it is welcomed. Again, at this point in time, we all accept times of emergencies. We welcome that, but at the same time, we also want to ask how this may have an impact on perhaps longer term. And I do believe that the private sector and the market have reacted following the announcement of the Cukai Makmur. And therefore, it goes back to your question, Dr. Umar, about whether this incentivizes things like innovation and creativity and wanting to really climb that, proverbial value chain that we all talk about.
Thanks,
Thank
Tricia.
you.
I mean, in a nutshell, if I may, you look at the conversation, we have a short-term imposition of chukai makmur, for want of a better term, specifically to address the expenditure around COVID. That being said, you've alluded to the need for fiscal consolidation, particularly if we look at the expenditure in healthcare and education, which were up this year, but there needs to be some fundamental shifts, if you like, and broadening of the tax base. YBMK did talk about potentially, well, what's happening with GST, how do you broaden the tax base? If I could pose your thoughts, Nicholas, around this question of fiscal planning for our future needs, moving, where does chukai makmur, I mean, it's a one-off tax. Do we have any thoughts about what may happen in the future as businesses grapple with the new normal, if for want of a better term?
Thanks, Dato'. So I think when we ask about what it might look like in the future, we have to keep in the context of what's going on around the world as well. And I think as a result from the COVID pandemic, the Malaysian government, and to be fair, not just Malaysia, governments around the world poured out lots of fiscal injections into the economy for necessary reasons, right? We had to make sure that we could keep people alive. We had to make sure that people had food to eat. We had to make sure that we had to make sure to save as many micro SMEs as much as possible. But a result of all of that is a lot of fiscal injection around the world, which means that the fiscal deficits around the world are piled up. And that's just a fact, and we see in all the numbers, right? So the question then is revenue. In the future, a path towards a sustainable fiscal balance for governments, especially for those where they're very dependent on international trade, and how the fiscal deficit and the debt might impact, say, their foreign ratings to the currency. It really depends then on what kind of new ideas you can get in terms of revenue generation. So we can't divorce that from looking around the world, and we see, for all kinds of reasons, there are really kind of important structural moves that we're seeing. For example, the OECD has this global minimum corporate tax rate. Whether you believe 15% is sufficient or not is one question. But the point is that they've started thinking about a global minimum corporate tax rate, and it's only by doing it globally that you can actually make this work. The other thing to watch out for is the billionaire tax that's currently being debated in the US, where billionaires whose liquid equity that is unrealized might be taxed on that, right? So even unrealized gains on their liquid assets could be taxed. So Elon Musk, had a Twitter poll where he asked people whether he should sell his stocks to pay off the tax. But I think that the broader point is that around the world, we are seeing ways in which which governments are really trying to pin down some of the problems of the old taxation system, leakages, very huge distributional issues, the lack of actually progressive tax regimes. And so when we think about what comes next, I'm not an evangelist of one tax over another. I think that we have a toolkit, and we should try to put as many tools as we can into a toolkit, and to see at the right moment and with the right opportunity what tool we might want to use for a situation. So I think we should expect more creative ways of doing fiscal policy, whether it's revenue, even on the expenditure side. I thought the ecological fiscal transfer idea that was in the budget is actually pretty innovative. Hopefully they can continue to build on it and increase the quantum on that. But otherwise, I think as we look forward, we should expect to see new ideas for how we do fiscal revenue, because fiscal policy, and we're going to take a lot of lessons from each other around the world, because everybody else, they're thinking of how to increase their revenues as well.
Thanks, Nicholas. And I think there's a nice segue, if I can just pick up on the OECD global minimum tax move. I think it's inclusive. I think it's a very good idea. I like it. Now, that then moves me to foreign sourced income, something else perhaps some of us didn't anticipate in this year's budget. So if I can pose a question to you, Mark, what your engagement again? I know you've had a meeting with MOF recently, and is it on remittance? Is it on dividend income, capital profits? How is this new, if you like, the broadening of the tax base going to work? Will it be like a US system where you have to declare realised, unrealised, non-remitted, or is it going to be on a remittance? So that kind of clarity would be highly useful.
Thank you, Dato'. The foreign source income tax is partly a response by Malaysia to the EU's grey listing, and it's also part of our government's initiative to widen the tax base. And there has been consultation by the government prior to implementation, so it wasn't really a big surprise to the community. The authorities had circulated a consultation paper a year ago to various chambers of commerce and industry associations to get feedback on how it should be implemented and what's the view across the industry. What the IRB has clarified during their seminar yesterday, and I think that was a very good, very efficient session, are several points. Number one, the foreign source income is subject to tax only if you're a tax resident, right? So non-residents, you will not be subject to foreign source income rules, and it's business as usual for you. Number two, the existing distinction between revenue income and capital gains still remain. Malaysia is a jurisdiction that currently does not have a capital gains tax. So if your foreign source income is derived from a capital gain transaction, such as selling off a foreign investment or making realizing a profit from your debts you held to maturity, this would not be taxable even though you bring it back to Malaysia, right? Number three, our foreign source income rules are focused primarily on income remitted to Malaysia, and this is very different from a lot of jurisdictions that have worldwide taxation scopes, where they tax you based on your nationality or residency, and at the same time they tax you based on remitted, unremitted, earned income or unrealized income. No, Malaysia is applying the tax currently based on remittance only. So technically, if you keep the gains overseas, that will never become taxable until you bring it home. Operationally, I think that's going to be very challenging to administer, to be realistic. How do you know when the money remitted back is from capital or revenue? How do you split this apart and determine what is taxable? That is another Pandora's box we're looking at as well. The good news that I can share is that the implementation looks to be staggered. So foreign source income remitted between 1 Jan 22 to 30th June 22 will only be subject to a 3% tax on the amount remitted. Only after 1 July 22 will the tax be applied on the recipient's prevailing tax rate. So there is still that 6 months window for investors and Malaysians to restructure their portfolios and really look at how they want to manage their investment strategies in the future. One of the key issues that were discussed is how will foreign source dividends be taxed? We know dividends are paid out of underlying profits, right, which have already suffered taxation at the paying jurisdiction where the profits were derived. Now, when you bring it back, it's going to be taxed again at 24%. So is there a form of double taxation? Simple answer is yes. There are various ways to seek relief, and currently Malaysia has a wide network of double tax treaties that give, but you need to delve into the detail from a country by country basis. What is the relief available between Malaysia and a specific jurisdiction? Some may give you a relief based on underlying tax you've already paid. Some may give you relief based on withholding taxes that you've paid on a dividend, but it really needs to be looked at on a granular level. Malaysia has always had these foreign tax credit rules, but we've never really had to refer to them for the majority of us. I guess we have 2 months to get really reacquainted and see where we can take this. One of the issues that I would like to bring up is there's a lot of commentary that this makes us uncompetitive tax jurisdiction in the region. I think maybe yes in the short term, but not in the longer term. Almost all our neighbors have some form of foreign source income tax, and to be honest, we are late to this game. And it will force us to look at how we will remain competitive without tax benefits, but it is a reality we have to face. And our foreign source income rules are different from our neighbors, and like I said, it's based on remittance, not earnings, so there is still a fair way to plan around it. I hope I've answered your question, Dato.
Oh, I think it's very good. It's brought a lot of clarity. I mean, the key takeaway, it is on remittance. It has to be crystallised. You have to bring it home, so to speak, and that allows for appropriate planning and so on. And for those that need to remit, there is that window period up to 1 July next year to take advantage and reposition their portfolios. Tricia, if I can perhaps ask a question of yourself. From ideas perspective, from the work you've done, is budget 2022 adequate to kickstart the economy and provide that support to our MSMEs and that pivot to green from the work that Ideas has been doing?
Thanks, Dato, for the question. So I think the response is probably yes and no. So yes, to the extent that there was quite a lot of emphasis on the MSMEs and the informal sector that were greatly affected by COVID-19. So there were lots of initiatives in Budget 2022 which provide for welcome relief for this group as well as other susceptible groups. So things like emphasizing revival of businesses, covering the cost of SOPs that will be implemented, relief wages, and so on. But I think the main thing, of course, would a lot of the future projections would be highly dependent on how much we're able to dedicate to, say, vaccinations and another round of booster shots, should there be another wave that takes place. I think the main concern about whether or not we are addressing, and of course I understand that Budget 2022 is just a one-year document, and I think it just happens to be that it was released hot on the heels of the 12th Malaysia Plan. So I think it's quite easy for us to see both the 12th Malaysia Plan and Budget 2022 as key policy documents of this government, right? So it is this government's first budget, this government's first major policy document as well, the 12th Malaysia Plan. So sort of seeing both together, I think we have express some of the concerns regarding longer term. So it's not just about recovery. I think that both documents emphasize a lot on things like distribution, cash aid, and so on. But thinking about longer term structural reforms, there was some of that, and I think there were attempts this time to accept that there's a need to address that, but whether or not these things would be addressed, I think there were also some missed opportunities in terms of focusing on long-term economic recovery and growth. So one big area, of course, would be to look at the role of, so the Budget 2022 emphasizes the role of GLCs in contributing aid or to help the SMEs, right? So there was one section that clearly talked about a high dependence on GLCs to help SMEs. So while I think that is, it's noble, it's honorable, and Malaysian GLC ecosystem is very large and very, very broad, I suppose the question is that really incentivizing the right kind of competitiveness levels, the kind of natural ways in which the SMEs themselves could develop. Another example, I suppose, would be like the emphasis on job provision. So again, it's positive that there are programs such as MyStep, where up to 80,000 contract job opportunities are offered. 50,000 of that will be allocated to the public sector, 30,000 to GLCs. I think the concern that we have expressed is what happens in the long term. And in this budget document, the Jamin Kerja was the program that was announced. So in both Budget 2021 and Budget 2022, what you see is a sort of very, I suppose, strong hand of the state in creating these jobs. And I understand like this is necessary now because unemployment rate is at an all-time high. I suppose one risk, so we see that, I suppose public policy researchers will have to always think about policy decisions in terms of risks and trade-offs, right? Every time you do something, there will be a trade-off. So the risk of creating these jobs is that there's a potential of cultivating, rent seekers in the long term. So creating jobs for that perhaps may not be contributing as much real productivity to the job market and to the economy as a whole over the long-term basis. We've done a lot of work at Ideas on GLCs. We've published a lot of books and reports, publications. So whether or not there would also be a sort of situation in which the private sector is crowded out, where we do see a very large share of state-owned enterprises or government-linked companies. But having said that, we have also welcomed initiatives like Perkuko, which is going to streamline the GLCs and the GLICs in Malaysia. So these are positive steps, but I think really considering what do we really want to see and what would be the source of growth in the long term. So if we truly believe that SMEs and the private sector are the engine of growth, do we emphasize that and competitiveness, maybe looking even at the Competition Act and so on, and how does that look like vis-a-vis the GLC sector? So maybe I'll stop there for now.
I think, Tricia, you raised some very interesting ideas. I mean, clearly, the drive for efficiency, the pivot to a high-income economy. I note the comment on rent seekers, juxtaposition that clearly these programs, one would look at them as being catalytic in nature and to provide that jump start, particularly for these hard-hit sectors. That being said, at the exchange, we do not differentiate between PLCs and GLCs. And as you know, we are pushing the PLC transformation program, which puts them all in one bucket, because we have a view that if you are listed, you play by the same rules, and that begins to drive the whole efficiency matrix for the economy as a whole. But that being said, we have to recognise that SMEs are 99% of our businesses rather than... so everyone has a role to play. But I think the interesting piece is how do we move our efficiency levels up to remain competitive, and then get back to your comment previously, Mark, that yes, there are new tax imposed. We've come late to global recognition of tax, albeit by the way of remittance. If you like, Malaysian businesses are being challenged, and I think that there's an overlay, particularly since it's COP26 week, of ESG. Environment, social and governance, what moves the dial in that space, and how does Malaysian businesses take advantage of supply chain disruption and insert themselves into supply chains that are being disrupted. Now, if I can pose a question to you, Nicholas, I mean, getting back to foreign source income, I think, so capital is required to grow businesses. Do you think the imposition of tax on foreign source income being repatriated is going to impact the flow, flowing back and impact our currency in the medium term?
This is a good question. So I think, I guess first, let's look at it from the perspective of, let's say, individual or firm or whoever it might be. Certainly, whenever things like incentives, taxes or subsidies or incentives are introduced in any budget, they do change people's perspectives on what they might want to do with their money flow. So certainly, there will be people who make decisions based on the removal of the exemption of foreign income as well. But I think the longer term, but since you asked about the medium term, the longer term prospects for the country ultimately will depend on more fundamental things. Incentives and taxes and things like that are all well and good, but ultimately it will depend on, I think, some of the things that Tricia mentioned and Mark mentioned as well, on actually the productivity and competitiveness of our firms themselves. And they don't necessarily need to come from a tax regime or whatever. It's whether, at the base of it, so economists have this very weird way of defining productivity. It's actually like a residual in the in the growth accounting thing. But really, productivity is really like when you base down to it, it's either given the same level of input, do you create more output? Or with the same level of output, do you use less input, right? That's the basic thing to do with productivity. So that is not going to be necessarily solved by changes in tax regimes or things like that. It's whether or not we can get some of the fundamentals right in terms of things like our education, our social support, our labor market laws, and other things like that, which are more fundamental to structural transformation in this country. And then it's whether or not we can actually pivot towards more new higher value added types of economic activities, moving away from an economy which has historically depended on being competitive because of low cost labor, but really our wage structure now has grown past that, and we should transition away towards one where let's depend on on an economic structure which creates better paying jobs for our people, makes use of the fact that we have we have a good cohort of graduates, a lot of talent in Malaysia. Let's see whether we can use that. And I think those are going to be more impactful in the medium and long term. The fundamental structural transformation of our country, and the other parts of it, whether it's taxes, incentives, and so on, will be complementary to that. But I think the bigger portion is whether or not we can actually make changes to some of the fundamentals in our country and drive new avenues for economic growth.
I mean, if I can, and I think, that's really the challenge that we all have. And if you look at the economy bouncing back and our aspiration to be a high-income economy, Nick, if again, to just working on that theme, in your mind, what can be done to elevate and achieve that? I mean, a few building blocks we've talked about. I mean, clearly, incentives, etc., they facilitate, but they're not the actual driver. So it's capacity, people, etc.
Yeah. So I have a crazy idea, and so I should say at this point, this is my personal idea. It's not not representative of my organization or things like that. But okay, so I really believe that as a country, or anywhere really, that if you really want to have a real innovation-based economy, which I think is what we need to move forward, you really need a combination of three things, right? The first is something we actually do have quite a bit, which is a commercialization unit. If you see something interesting that can be commercialized, let's do that, right? The second thing is applied research, where applied research is stuff like you take, something from quantum physics and maybe you set up a quantum computing sort of thing. And applied researchers are not necessarily good commercializers. They like to apply, they're like engineers who might like to apply fundamental stuff to something practical, but they may not be the ones who commercialize it. And the third part is something that I think the country really needs to focus a lot more on, which is basic research. And basic research is fundamental research at the level of theoretical science, engineering, actually whatever. It could even be in literature, human, it doesn't really matter. But I think we really need a combination of these three things together, packed under one sort of umbrella, not necessarily the same organization, right? But at least some sort of model where you allow the basic researchers who want to derive fancy new theorems, but aren't thinking about how to make it practical, then the people who then make it practical, and then the people who then commercialize it. The three different skill sets. And I think a lot of focus in Malaysia has gone to the last one, a bit in the middle one, but the basic research, I think, is something we need to focus more on. So as a building block, to your question, Dato', I would really start by actually coming up with an innovation system which actually takes in all three of these things: basic research, applied research, and then the commercialization. We're probably a little bit too much focused on one end, and it's really something I hope we can actually focus on the start. And there's actually an institute in Princeton called the Institute of Advanced Studies, where it's meant to have useless knowledge. And what they mean by useless knowledge is research for research's own sake. And it's important because that's how you get the theory of relativity. That's how you get quantum mechanics and things like that, right? And from there, let's see what knowledge we can use to apply and then commercialize. But we need all three, and I fear we don't have enough of one.
And the one we don't have is basic research, and funding basic research is the most difficult piece. Your
That's right.
thoughts, Nicholas, on funding it, since you put this question, and then we'll come back to unicorns and where does it all fit in. So basic research needs to be funded. We have VC funds at the other end of the spectrum, commercializing. So how do we get dollars into basic research?
So we need to think of basic research as a public good, right? Where a bit like things like traffic lights or public parks or things like that, where really if the knowledge comes out, it's something you publish in a paper, it's not patented, right? It's at the basic level. I mean, the theory of relativity is not patented, is it? You don't have to pay somebody to use it in
So
papers or whatever.
would you have a double
But,
tax?
and therefore, if you think of it as public goods, that it comes from public funding.
So you
And
public
that's how we
funding
need to
or
think about
fully
that. So-
rebated tax incentives and so on?
Sorry, I didn't catch that.
In the US, for example, looking at a different jurisdiction, basic research, I believe, enjoys significant tax rebates. So it's not
Yeah,
deductible.
so we
So you got to
we could
shift
think
it.
Yeah, we could think of very different ways to fund it, but ultimately, I think we need to start thinking of it fundamentally as a public good. And once we start thinking of it as a public good, we'll figure out public ways to fund it, whether it's via tax rebates, direct grants, all kinds of things. But its knowledge ultimately is a public good, and we need to treat it that way.
Oh, thanks, Nicholas. And I think that's a nice pivot to where I'm going with unicorns. And there's been much angst in our market. We've seen Indonesia with unicorns, and Singapore, of course. We have some of aspiring unicorns will be joining us this afternoon, Mark, talking about entrepreneurship, incentives, and tax structure. A little bit of context, what could Malaysia do in that space vis-a-vis our near neighbours to spur this growth of the new economy from a tax perspective?
Thank you, Dato'. I think when we talk about tax incentives, we need to consider other options or wider options rather than just pure exemptions and profit shelters. In the case of many unicorns and startups and entrepreneurships, the initial years are capital intensive and not really very profitable. So profit shelters and allowances really aren't going to do very much in the short term to help these businesses grow and develop and reach the level we want them to reach. Allowances aren't going to benefit you because the critical issue is still how do you get funding capital to achieve the level you want to achieve. I think we should consider potential government partnerships with strategic targets to provide the capital and funding they need, and perhaps in return for an equity stake or maybe a share of future profits to remunerate the government for the risk it's taking as well. Or the government could introduce similar initiatives by bringing in the private sector to provide these fundings and give the private sector maybe some tax incentives or shelters to encourage them to take up this risk as well. There are several countries who have similar programs, so this is not radical or new. We just need to tweak it and localize it to our basic approach. Alternatively, we can also give tax breaks to investors who register with specific agencies to invest in projects that we want to encourage and support. I think it's also important that the government have an appreciation of what the needs of these entrepreneurs are and how to meet these needs instead of having or rather fixing preset conditions or expectations of entrepreneurs to fill and fit certain categories. Maybe I'd like to share a short life example that I've gone through myself. I used to work from MNC, and we were looking at setting up a online shopping platform similar to likes of Lazada and Shopee. But the approach that we wanted and the objectives we had did not fit into any pre-existing molds or any pre-existing models or activities. So to cut the long story short, we didn't really get the support that we needed, and the project didn't really take off. So if we're looking at supporting entrepreneurs, especially those with radical new ideas for a new economy or people who are looking at disrupting the way things are now and bringing new things to the way we operate and work, we have to be ready to be flexible and agile like them and provide the customized support they need. Malaysia has a very good pre-packaged incentive program, we call it. So what we do is you engage with the government and tell them what exactly you need, right? And how can they support you and why they should support you. And this negotiation process will come up with a tailor-made incentive for you. I think this approach needs to be more widely available to cater for the growing diversity in the market. And At the end of the day, this is how we provide tailored support and customized support to help these entrepreneurs with new ideas to get their business to where we want it to get, right? Other forms of support can also include matching grants to cover operational costs, providing facilities such as land or infrastructure to drive specific needs. And the government doesn't have to fund this all by itself. Strategic partnerships with the private sector would be beneficial to everyone. To draw an example for just what happened last year and this year, look at how the insurance sector has come together with the government to offer pelindungan tenang, right? This is an excellent example of how private and public sector can work together to achieve a common goal. And the same concept can be applied to get the private sector to provide specific support to key projects. And taking a bit from what Nicholas just mentioned about supporting research, there is currently incentives and support in the tax structure to encourage this. But I think one of the key problems holding it back is bureaucracy. Getting the approvals you need to claim a deduction, getting the approvals you need for a grant. This is a very time-consuming process, it's a very painful process right now. And I get it. There is a need for the government to be sure that they are supporting valid projects that are in line with what they want. But the process could be simplified, the process could be less painful at the end of the day, and this may make it more appealing for people to take up these incentives, right? So for example, if you wanted to support a public project around infrastructure or around education or property, there are the facilities there to help you get a tax break out of it, but the process is very long. It's quite challenging to do, and there are a lot of operational roadblocks. So simplifying this process could make it more attractive to the private sector to get involved in all this.
Thanks, Mark.
And I guess one last bit from me will be one area I really like to see more being done is targeted support to continuously drive our sustainability agenda. We already have many incentives that support efforts like energy efficiency, solar power, waste management, but sometimes they are very specific and they are very limited to the groups who can really benefit from it. Maybe we should start looking at more wide-ranging incentives and programs to encourage Malaysian businesses to venture into more into businesses that are aligned with this, right? Rather than supporting their costs, let's work on supporting their revenue side. I think there's a lot more interest to the businesses in that aspect. Perhaps instead of cukai makmur, we should have considered a carbon tax that would be more in line with our sustainability goals, and that would also generate revenue for the government. I acknowledge that carbon tax is a lot more complicated in cukai makmur, but maybe in the longer term, that's something we could look at. It doesn't always have to be a carrot approach. Sometimes the stick can be just as effective. Encouraging financing and investment in these sectors, but given specific tax shelters for these transactions, also something we like to look at. We can no longer afford to look at sustainability and environmental agendas as on a piecemeal basis, and as a country, as a tax system that wants to be holistic, we should start looking at how to gear our economy towards that, and how the government can support it either through tax incentives or through maybe other forms of legislation.
Thanks, Mark. And I think we all wholeheartedly agree. I think this is a very interesting piece. As you know, Bursa has recently been tasked of establishing a voluntary carbon market with a view to establishing a domestic emissions trading scheme, of which a carbon tax will be part of it. But given the impact to business, we will start with a rules-based voluntary carbon market, which does not require legislation, to be frank. We will be rules-based, very much like the equity market and the derivatives market is today. That commences the establishment of an ecosystem. You then start looking at, if you like, capturing, moving into the carbon tax space. And I think the key theme that you quite rightly said is that investment in sustainability, investment in ESG is not a cost, it is an investment. And it alludes to my previous comment about inserting Malaysia is an intermediate manufacturer of goods in many cases. We are a trading nation. We need to ensure that we are part of supply chains. And I think if I could perhaps pose a question to you, Tricia, as we talk about ESG, and clearly it's a global trend. It's very topical, of course. So I mentioned COP26, but we're talking about CBAM. carbon equalisation tax. It is a new form of tariff barrier. We need to be ready for it. Now, in your mind, what can Malaysia's public and private sectors do to adapt to this new environment, given these anticipated internal and external pressures that we're going to see, and help us shape the economy? And there is a broader piece, that how do we actually pay for that pivot? Because as we move from, for want of a better term, a brown economy into a greener economy, there will be dislocation and there will be social impact. But what we've seen is there's a lot of conversation about the impact, but not about the opportunities that the green economy will actually provide if we pivot successfully to it. And we can pivot and actually move to a high-income economy, taking that momentum with us, if I may. Tricia, your thoughts?
Yes, thank you, Dato. So I think the last few budgets have been good in the sense that they've emphasized some form of sustainability within the speech, at least, as well as within the budget documents themselves. But I do think that there was also a missed opportunity there where we could have done a lot more. For example, making very clear advancements into our commitments of moving away from coal dependence into gas for the time being, but then eventually into renewables. And I know that there are discussions right now. The government's also planning to emerge with a national energy policy, and there are debates within that particular energy policy, like what were the price points that both individuals as well as companies are willing to pay as we move away from this coal dependence. But more broadly speaking, sustainability is only part of this global trend, as you say, on ESG. And I think already in the last year or two, we have seen very real implications of companies on our shores, perhaps not immediately adhering to the ESG. And I know ESG is still, being developed as we speak, also from your side, Dato'. But we see, for example, companies in Malaysia already being banned by the US Customs and Border Protection over issues ranging from labor and so on. I think labor is the primary reason. So while we may have debates over what these standards are, essentially what I believe needs to have an overhaul would be our domestic labor practices and policies. And this actually brings me to the governance aspect of the ESG, but also back to the question of what we've been discussing over the last round or so on how do we get those economic fundamentals right. So I completely agree as well that we need to get those fundamentals right. And there are quite a lot of fundamentals that we need to get right. So apart from investing into healthcare and education, which the government does believe in, there are other aspects as well that would contribute to a stable environment moving forward. I think primary concern or perhaps factor right now would be political stability. That's one. This is something that's quite clear that emerges as a factor that influences investors coming into any country, really. And why that is because that's linked to the next thing, which is the kind of governing framework and the institutional robustness of any country. I think institutional independence and the stability of these institutions. And what this all means is essentially, do they contribute to a rules-based environment? So we talk about carbon tax and environment, but all this needs to be premised on a transparent and accountable rules-based environment, which would then allow the G in the ESG to actually function. So there's no point in committing to these very high overarching goals when we don't get some of these basics right. I would say that a very important opportunity here, and I also completely agree that Malaysia has always been a trading nation. The entire region has always been trading region. That we need to also think about, some of the multilateral agreements that we are currently in negotiation to sign. So I know that the plan is to ratify our RCEP. There are also discussions en route to ratification of the CPTPP. And the CPTPP, it is a trade agreement, but it's also an opportunity to get some of these fundamentals, such as procurement transparency, There's a whole chapter on SOE, there's a chapter on intellectual property, a lot of talk we were having about research and how do we incentivize research. I think IP is a key piece of that. And these procurement transparencies and ensuring that the governance and domestic regulatory environment works best for us, this also ensures that we can attract the right kind of FDI that we want. So I think there's also been a question about, have the FDIs to Malaysia been productive? And IDEAS is doing something which looks at, constructive versus corrosive capital, like what kind of capital that comes into the country which can be constructive. So we've looked at, for example, the BRI projects in the country, the ECRL. We're looking at Malacca Gateway, Gemas. So, are there losses or gains made with regards to these projects? But more importantly, it's about the local regulatory environment, right? So, like, do we get that regulatory environment right? So, kind of going back to your question, sustainability, yes. So that's the environment part of the ESG. But the governance piece is really crucial. And as the private sector, so I know the firms and public listed companies, of course, are going to be facing these new pressures, which come not just domestically, but from outside, from the US, from the EU. I think anybody who exports to these two regions will need to be perking up their ears and really thinking about these labor practices, which, by the way, the CPTPP also provides for much more renewal of these labor practices. So if we can have that kind of overhaul and thinking about a real 21st century kind of economic environment where we can be accountable in these kind of global standards, I think we will be on our way there. I just have one final thing to say about competitiveness and SOEs. I think it goes back to, eventually the question would be, are there spillovers? So whatever investments that we take in, whatever global value chain that we are part of, foreign investments, whether it's from China or elsewhere, will there be spillovers, and what would the impact be on our local economy? So how do SMEs benefit? I think ultimately that's a question that we need to be able to do research on, and to be able to do good public policy research, there has to be a lot of availability of data as well. So I think the pandemic is a time that we have all started to realize the importance of having good, transparent data, and the ability to make decisions based on data, based on science. That's crucial, because I find that sometimes we may have these very highfalutin policy objectives, but we don't necessarily back the policy decision that we've made with data in order to know that this particular instrument can achieve the intended objective. And one example of that perhaps would be the recently announced Bumiputra safety net in the budget, or rather in the 12th Malaysia plan, which was recently announced. And so I think I would just leave it as a question as to whether or not the intended policy objective would be achieved with the policy instrument, because ultimately there's a need to maximize the value of sales for the shareholder and stakeholders. That should be the priority. And whether or not that would be achieved by the equity net framework, that would be a question that I have. Yeah, thank you.
Thanks, Tricia. I think there's a couple of themes we'll pick up on. Clearly, ESG. I think in a moment, Nicholas, I want to have a chat to you about the social element, because I think that's fundamental, because the whole purpose of the budget is about building inclusivity, leaving no one behind. The inclusion of the Bumiputra equity agenda, Tricia, well noted. We're all engaging EPU, creating greater clarity. I mean, that concept of, I think we could boil it down into granularity. How is it going to work? How is it going to be achieved? Bearing in mind, for example, GLICs have a mandate for maximised risk risk maximum, they're looking to maximise return on a risk basis, and therefore we have to sell shares to the highest bidder. I mean, how will this be, how is it operationalised, for want of a better term? Bearing in mind my previous comment, we at the exchange do not differentiate between the GLC and the PLC. You are a PLC by nature. We want all PLCs to be high performing. And so I think these are challenges that we're going to take forward. But I think that there's the piece around social, and it's fundamental how we treat each other and how we treat our foreign labour as well. Tan Sri Wahid has commented on that. We have commented on that at the exchange. We have been engaging. It's clearly something that's very important. If we look at our neighbours in Singapore, they have pivoted. Foreign labour are guests, they're working, they're creating value, and we also need to embrace that concept as well, I strongly urge. Now, Nicholas, in your latest article in The Edge titled of June, Star Wars and Social Mobility, you wrote, social mobility amid growing income and wealth inequality exacerbated by the progressive pandemic crisis must continue to be three top priority for policymakers. What would be your suggestion to our policymakers?
So, okay, again, personal opinion and not and not representative of any organization I work for. I think if we really wanted to fix social mobility in this country, or at least a step, right? Because how can you ever really fix it just like that? But I think the first step would be to mandate that if you are a member of parliament or in public service, you have to send your kids to public school. Start with that, and then we'll see the public schools improve.
Yeah, I've often said, and I think when you put everyone together, I appreciated many years ago, we sent students overseas, but if we keep everyone at home, you actually raise the level of the class. There's that challenge, if you like, and that synergy and that synergistic benefit. Now moving on, I see we're winding down the clock and I'm getting the wrap up, but I still think there's a few questions I'd like to pose. Mark, which country's tax system is our best learning model on our current GDP structure? That's a difficult one, but something to...
Yeah. I think no matter how I answer this, I'm not going to make many friends across the line. Objectively, I don't think no one system is the best fit, and there are a lot of bits and bobs from everyone that we could learn from to enhance ours overall. The tax system as a whole needs a lot of work. It doesn't need real reform, but there are a lot of things that we can do better at. For example, we can borrow how the UK conducts public consultation before making significant changes to the system. We've come a long way over the last 2 years when it comes to public consultation on taxation, but we still have a long way to go. And the way the UK does it, by putting up things for discussion, not only to specific stakeholders, but to the public in general, I think that's a very good approach. It fosters transparency, it engages the public in the conversation, and then we get a lot more views at the end of the day. I like how Australia publishes their rulings and viewpoints. They have a very structured approach to it, also a very consultative approach, and they do it very well by setting down what the authorities expect, what the authorities want, and what they've considered at coming to their decision. So that level of transparency as well is probably the gold standard I really look up to. When it comes to foreign source income and capital gains tax, maybe in the future, I don't know, we could take notes from our neighbors that have adopted this longer than we have, like Thailand, Indonesia, Vietnam, to name a few, Australia, UK, the US as well. There are lessons and challenges they have learned over the decades that we could learn from and adopt, and we can learn to avoid the mistakes that they made and how to do better to suit our local market and our targeted investor groups. If we are looking at indirect tax systems, more mature countries that have had indirect tax systems longer than we have, like Singapore's GST system, that can be a good model we can refer to if we are looking at that in the future as well. I know this sounds a bit cliche and a little bit diplomatic, but no one country does it best. Everyone has their shortfalls. But like you said at the start of this forum, As we work towards a more equitable global tax system, we can all learn from each other and see how we are all doing different things differently, who's doing it well and who's not doing it so well. And we can use these as lessons to help us as we venture into this sort of uncharted territory, so to say. I hope that answers your question a bit, Dato.
No, thank you, Mark. I mean, I have a question from the floor, and I was expecting to see it a little bit sooner. So, if with the panel's indulgence, I'll take it. Stamp duty, much excitement. Increase from 10 bips to 15 bips. What does that mean to the market? Now, I mean, if I may, panelists and audience, we have to look at it. Why do people invest? People invest for value, people invest for dividends, but they also have different trading behaviour. GLICs, for example, are taking a longer term investment view, medium term view. I think when we actually have a look at our market and then we look at who's trading, I think it's not so much the increase in stamp duty from 10 bips to 15 bips, but it's actually the reduce of the removal of the ceiling from 200 ringgit is probably the question mark. Now, to give a context, there was a lot of conversation engagement with the industry around a capital gains tax for share trading. Now, this is an area that's not been taxed previously, and that would get imputed into returns and so on. But is that to not tax shares per se? I think Nicholas and Tricia and yourself, Mark, would say that would be regressive. We should be progressive in our tax structure and we should be more inclusive. That being said, bearing in mind I wear the hat of the exchange, if you like, the engagement with the authorities and particularly with YBMK is we found that there is a middle ground, which is stamp duty. Now, that it needs to be fine-tuned, but when we actually look at the performance of, we stratify the market, the traders that are going to be hit will be the day traders, the high-frequency traders, perhaps the proprietary trading funds. And so they represent about 10% of the market. Now, what does that mean in the medium or longer term for the market? Is there a reduction in liquidity? Potentially. We've seen trading values drop from the first half of this year. We're probably doing about 4.1 billion ringgit a day. Yesterday we're doing 2.3. I think there is always a knee-jerk reaction. There has been a softening. What is the new normal? And I think you also need, there's a lot of exogenous factors such as the tapering and liquidity being removed from the market. So the long-term impact for equity investors, I think long-term equity investors will be with us. I think that there is another query, and I'm bundling a few answers into the same, a few questions in the same answer, is what does it mean for IPOs? Well, I think for ACE and Leap Market, it's business as usual. For main board, there may be I mean, it's all about depth of market at the end of the day, and it does remain an imponderable. But all stakeholders are committed to having a high degree of liquidity, because that liquidity allows capital to be raised to do all the good things that capital does: employ people, pay for research, basic research, applied research, and of course our unicorns as well. Now, as we wind down the clock, Tricia, if I can pose a closing question to you. The spirit of Keluarga Malaysia has been the main theme post to the MOU signing between the government and Pakatan Harapan. Do you believe the budget is reflective of it?
Thank you, Dato. I do believe that the budget attempted to cover as many sectors as possible, and in answer to the question, that would be a yes. It's so widespread that everything is covered. So the question is more about depth and whether or not we have been able to achieve depth in each of the different sectors that are covered. So we've got a lot of emphasis on women. So that's something that I should be happy about. Emphasis on mental health, emphasis on SME, so a very wide spectrum of sectors were covered. But I think the depth, some parts of them did have depth, but perhaps others could have been done better. And in the interest of not repeating myself, what I said earlier, I think good on short term, which is important in a time of emergency, but questions over the long term still are at large. For example, not to prolong this answer, but things like even the Cukai Makmur itself, right? I think there would still be some questions in the long term about whether this will be imposed in the following tax year, or if it's not going to be imposed, will it be brought back each time the government faces a severe deficit or debt to GDP ratio that is increasing? So I think questions over the long term would still be important to shore up confidence. And hopefully in the coming budget years, we will see more of that being made known ahead of time. And look forward to seeing the midterm review reports and other reports, as I mentioned earlier, to be perhaps made available to the public upon the first round of drafting. I think that will help. Thank you.
Thank you, Tricia. Nicholas, if I may. One of the issues, I mean, we were talking about fiscal reform. A lot of conversation about how we apply and how we raise funding. I think there is another issue with the budget that we all focus on is the high fixed operating costs, which is leaving us with little development expenditure to drive new pillars of growth. And we have a number of questions in that space. Thoughts about, and I will pose the same question to you shortly, Tricia and Mark, how can we resolve this structural issue? I mean, you've got income, I mean, you've got expenditure. Expenditure is primarily operating, but actually government acts as a catalyzer and an impetus. How do we get our how do we get that capital back into that catalytic application, for want of a better term?
Thanks. So this is a very multifaceted question.
Yes, that's why
so the way I would
have
think
enough
about
time
it
for it.
is that okay, so a very short answer is I think the government has to be very clear about how to get the most bang for its buck in terms of the fundamental things it can resolve that require. So okay, not every fundamental issue in Malaysia will be solved by more capital coming in or more OPEX or whatever. Some are regulatory, some are a signature of a pen or whatever it is. I think when it comes to having limited fiscal space because of very fixed OPEX, right, such as emoluments, pensions, and so on, then we have to really think about where the government can get the most bang for its buck in terms of the objectives that it wants to have, whether it's social protection, whether it's new areas of economic growth, and to what extent can it sort of just plant the seeds such that private sector firms or anybody else would want to take up the challenge. And that bang for the buck is probably, I think to something Tricia mentioned earlier, more of the reports that talk about transparency, the data that we can get out of some of these things could be very useful. But certainly, when you're limited, it's a bit like management theory, right? When you want the company to be starved of capital, you load them up with debt and they have to figure out how to repay the debt. That's almost what the government is in right now. So they have to be as agile as they can to try and figure out how to get the most bang for their buck on any new OPEX or even CAPEX that they want to put in. It's a tough question because you need a lot of stakeholders to buy in with your story. But the narrative really needs to be about how you can get the most bang for your buck.
So if you like, we have the MOU. So we remove political differences with one view of Keluarga Malaysia to drive growth for the betterment of more Malaysians. We have a strategic investment being made in 5G as a key enabler, the pivot to IDR 4.0. And I think, just not focusing on the manufacturing side, the automation side, but there's a whole piece about thought leadership and applied technology that goes into software and so on. And Malaysians are incredibly inventive. So there's that piece. And then we raise productivity and, as you quite rightly said, when you have high debt levels, sometimes you find your own solutions. Tricia, same thoughts around that question again? High operating costs, is it bang for buck? Is it a smaller government?
Well, definitely, Ideas as a think tank believes that a smaller government would probably result in greater efficiency. One thing that could really be helped would probably be looking at the Auditor General's reports that come up on an annual basis. And I think the Auditor General reports very clearly and blatantly describe how much more could be done with the amounts that we already do have. So if that sort of wastage can be addressed, and this takes place year after year, so the question would be asked as to why it is that there are really no implications as to the things that have been revealed in these reports on an annual basis. Is it because we don't have a sort of stringent punitive regime, as it were? What does that say about, for example, our Malaysian Anti-Corruption Commission? I mean, having said that, there are good provisions that have already been updated. So we've seen, for example, Section 17A on corporate liability being included there. But I think some of these provisions can be strengthened with regards to the public sector. And going back to whether you said big state, small state, I think the question is really, is whatever state that we do have, is it a good state? Is it a valuable, efficiently run good state? We've got so many blueprints, we've got so many reports and documents and roadmaps. We rolled out, for example, the My Digital Blueprint, and we didn't talk that much about digitalization today, but I think that also features very strongly when we talk about productivity and growth moving forward in the new economy. So the digital blueprint is excellent. It's wonderful. The blueprints always are extremely shiny and sparkly. But does the public sector actually have the capacity to deliver that? And also, do they have the absorptive capacity, right, for all these things that are being implemented within the public sector? So I think the knowledge within public sector, that's something that certainly must be addressed.
Thank you, Tricia, and I'm afraid we are out of time. They are waving a clapperboard at me. So, Mark Chan, Tricia Yeo,
Yes.
Nicholas Cole, on behalf of my co-host JP Morgan, of course, the Exchange, thank you for joining this capital market conversation this morning. It has been tremendous fun as always, Nick, and it was a delight to meet you, Mark and Tricia, today. And to our audience, thank you for the questions you posed. They are thought-provoking, and enjoy the balance of the day. Thank you very much. Cheers. And
Thank
stay
you.
safe.
Thank you.
Nice to
Take care,
meet you.
Dato'. Take care.